All right, everyone, welcome back to Quant Wisdom Wednesday. So, in this video, we are going to continue down this journey for quantitative traders and even for not quantitative traders who just want to start thinking about things in a little bit more of a data-driven sense. Now, what I'm doing, doing these small videos every single day, is trying to spread out some of the content for different potential traders and market participants. If you're liking what you see, again, make sure you let me know, hit the like button, all that stuff that YouTubers love. Now, we're going to talk a little bit about exits, and right now we have a lot of people who know you buy your stock, you buy your crypto, your FX, whatever it is, you put a stop loss, you put a profit target, maybe you get fancy and you put a trailing stop in there or something to try to keep you in a trade longer. Uh, but what about hold time? And this is something I don't see discussed very much, so I wanted to talk about today, and I've got some examples. Now, when I mean hold time, I mean you exit the trade as opposed to at a stop loss or a profit target. You say, I'm going to test how long is optimal for me to be in this trade, and I'm going to get out. And what does that look like? And what is the downsides and the upsides to doing that? Well, the downsides are clear. If I say I'm going to buy this trade and I'm going to get out in a week or 2 weeks or 2 days, or in the case of day traders, I'm going to get out at the end of the day. Well, what they miss is if it continues, right? If you have this thing that you were right on and it just keeps going for a number of days or a number of weeks or a number of months, whatever your time frame is, you'll miss that. However, what you end up generally getting back in return is higher win rate and sometimes higher profit. So, just to use an example of something that we have here, in which these are some strategies that I'm running currently over at Stats Edge Pro. You can check those out if you go to statsedgetraining.com and look at Stats Edge Pro. This is a strategy that I'm using here. It's a pullback strategy. It's my favorite right now. It seems to be working very, very well right now. We've had a lot of great trades from it. Now, this strategy is designed very simply. You're looking for a stock that's in an uptrend. You're looking for that stock to pull back a little bit. And then you're looking to buy that stock on a pullback and have a stop loss in place. And then I have an exit a 1 week later. Now, some people are going to look at this and say, well, it's a bit blasphemous. You're in, you're out. What if the stock you're in runs forever? Well, I can show you that test, but I can also give you some ideas when we look at some charts on how you can add a level of discretion here using this as a framework. So that's this back test. It goes all the way back till 2004. So it's a 20-year long back test. The green line is what would happen if you traded the system, and then the red line there is just the SP 500 for reference. This is a logarithmic chart, but if we unlogarithmic, you can see the strategy does way better than the SP 500, but we do have to logarithmic this just to make it sensible. Now, this is, again, exiting after a week. So if I buy the stock on Wednesday, then I'm going to sell it the following Monday. Monday on the open. I'm out regardless, whether I'm up money, whether I'm down money. If as long as the stop hasn't been hit, that's my hold time. And you can see, again, it's a really good strategy with a really good return. But we had a question when we did the live Q&A. Well, what if I want to hold these longer? Well, we can test them. So this is 2 weeks. Right? This is what happens if you buy it. You put out your stop loss. You hold it for 2 weeks. You can see still good strategy, still profitable. It's not as good because the system is designed to be this shorter term player, but it still works. And that's what we want to see with a robust strategy is that if you hold it for 2 weeks, you're still going to beat the S&P 500. You're still going to do very, very well in the overall market. Again, right, log versus unlog. Um, it's a great strategy there as well, but you can see that it's worse, right? So if we go even further out and say, what about 4 weeks? Right. So this is what happens if I hold it for 4 weeks. So I buy the dip and I put out my stop loss and I leave for a month and then I sell it. You can see a little worse again, still better, still a great looking trade, but a little worse again. And we haven't really done anything for a number of years here. So where does this deal with the discretionary trader? Well, first of all, I think you should put a shot clock on every single trade you take. You should take a trade and you should say, I am going to hold this trade, especially if I'm underwater on the trade. I'm going to get out in X number of bars. If you're a day trader, could be 5 minute bars. You could say, I want to get out in 10 minutes or 15 minutes. If this isn't working, I'm going to get out. If it triggers again, maybe I'll take another trade. But that alone does a couple things. Not only does it get us, this nicer return, but it gets us this nicer return in a way that makes perfect sense to me. The reason that this return is working better is because I get my capital back quicker. If buying these pullbacks has some sort of edge to them, and I'm counter trend trading, then I want to make sure that I'm grabbing that edge and I get my capital back and I can compound that equity more, right? So over this 20-year period, that's $100,000 into 6.4 million on this one, 3.2 and then 3.2 on the other two. And the main difference is I get my money back, right? I buy the trade, I have a nice trade out of it, and then I get my money back. But is there ways that we can go outside this? Because again, I always think that you take a back test, you take a system like this, and you add a little bit of discretion in certain parts of that. So let's just take a look at a quick trade that actually came from this particular strategy. And let's look at ESOS. No, let's look at Lunar. Lunar. This is one that triggered way back here, right? So we had a pullback trade right here. We bought some 2 days later. This thing gapped up. Wasn't quite at my exit time, but at that time, when we're having a nice gap up 2 days later, I exited 2/3 of my position. And now I held until this gap up, and then I exited the rest. So you can see that even though that's not what the system said, I was able to hold on for another, this is probably 2 weeks or 3 weeks from this point on this particular stock because I added a little bit of discretion to my exit. I exited 2/3 of the position instead of being all in or being all out. Again, this is where this kind of discretion can help out. If you're looking to just trade something based off of just a pure system, you would have been in. I think you would have been out for a little bit of a profit right here, and it would have been a fine trade. Here's another one with EOSE. Yeah, EOSE was a buy right down here, right on this candle in this area, call it 240 or so. The end of the week came, and all of a sudden it was up here at about 250, but it hadn't really done anything. So I can look at this chart and I can say this chart is in a nice uptrend. I can say that if I were to lock in profits now, there's really not too much to be had. So, what are some things that I can do if I want to extend my hold time? So, the plan then became very simple. I moved my stop up to the break even point. I said, hey, if it comes back down to my break even price, I'm not going to lose money on this trade because I know that optimal time frame. I know that optimal hold time going into the trade is about a week, but I'm going to give it a little bit longer. And then when we came up to $3 here 2 days ago, I exited most of the position there, and I still have some that I'm able to ride out. So there's nothing wrong with taking a back test like this and knowing roughly the optimal hold time and then stretching that a little bit based off what you're seeing technically on the charts. What I won't do is I won't, hold it past its stop loss. What I won't do is if I was down money on either of these positions, I'm not going to hold past that 1 week. I'm not going to hold on to a losing position and just hope it moves higher. But when I already have that little push in my favor, and there's some finagling I can do with price action and what I can do with stop loss and profit targets, I think that makes sense. And I think that's something that we certainly can do. So this is just a little rant that I had about hold time. I don't think it's something a lot of people consider. They buy the trade and then they get out. I would very much recommend going through your history, going through your trades and saying, what if I just exited at a certain time? Take whatever you're doing and saying, what if I was a day trader and what if I only held my trades until noon? Because hopefully you're recording all your trades. And I exited all those trades at noon and moved on with my day and had the whole rest of my day back. What would my P&L look like? I bet you in a lot of cases it would be similar to maybe even a little bit better. So, on top of your profit target and your stop loss and all these basic things, something else to consider when you're building strategies. Thank you very much for tuning in, and I'll talk to you soon.